You ready? You got me running. Shake it, baby. Raise your hands up. Raise them up.
Hi everyone, and welcome back to the Daily Currency Call with Forex Trading Asia. Thanks for returning as well if you are a regular viewer. And this is episode 382, and it's the 24th of September. So if it is your first time here, a big welcome. And just a quick introduction. We do this currency call every Monday to Friday at 11 a.m. GMT +8. And the currencies we analyze are as follows. Mondays, we do the Aussie and Kiwi. Tuesday, Euro. Wednesday, Pound. Thursday, the yen and gold. And Friday, we do CAD and crypto, Ethereum and Bitcoin specifically. So this is the currency call where you'll get market economic updates, key support and resistance levels, trade ideas, and of course, much more. This currency call is going to be very beneficial to both the long-term investors and the short-term traders. And here we will go through what could move prices, possible trade ideas, and we'll also highlight the potential targets and risks. Finally, a disclaimer. So any information shared during this session is not intended to be a trade recommendation. It is solely the opinion and views of the speaker. So please remember to do your own analysis prior to entering any trades as well. All right, so Friday morning here in Perth and also in Singapore, we had the Bank of England yesterday, and you know, it was, as Kim Hong mentioned, it was nothing out of the ordinary, but he will be discussing the interest rate decision and the BOC MPC meeting minutes as well. And Kim Hong will take it over from here.
Finally, we made it, the last central bank meeting for the month. Okay, Bank of England, what do we have? Let me just go straight into the statement. Bank rate maintained at 0.1%. Okay, boring stuff. Let's just get the boring stuff out first, all right? Interest rate remains unchanged at 0.1%, okay? Total QE, okay? Total QE remains at 895 billion pounds, okay? Regarding the voting, okay, for the Bank of England, there's actually this vote whereby, you know, they carry out to see if any members voted for an increase or a cut or a remain unchanged for interest rates, okay, as well as quantitative easing, okay. For interest rates, of course, at the moment, you know, we pretty much expect there's going to be no change, all right? There's going to be no change. Quantitative easing wise, all right. Back in August, I think there were 9 voting members, okay. One of them voted for a cut in quantitative easing, Michael Saunders, all right. This time around, there are 9. 1, 2, 3, 4, 5, 6, yeah, there are, oh, sorry, last month, correct, there are 9. Right now, there are also 9 members, okay. And there are actually 2 members this time around that voted for a cut in quantitative easing, okay. So it's actually, I would say, the central bank is starting to lean towards QE unwinding, okay. Well, QE tapering first before unwinding, okay. So that's actually a good point, all right, a positive point coming out from the Bank of England, okay. Next, yeah, so back in August, there was this projection materials being released, okay. Quarterly GDP for the third quarter of this year, I think it was, 2.9%, okay. However, yesterday, the Bank of England actually revised this third quarter GDP downwards, okay, from 2.9 to 2.1%, okay, and they explained that this reflects the emergence of some supply constraints on output, okay. So yesterday, I think hours before the Bank of England meeting, all right, the UK PMI data, flash PMI data for the month of September was released. And yeah, if you guys were to look at the data, there's actually a considerable slowdown, okay, in the expansion of business activities in the UK, be it in the services sector or the manufacturing sector, okay? And of course, they highlighted that supply constraint is the main issue, okay, behind this whole slowdown in the expansion of business activities, okay? So it actually tallies with what, the data actually tallies with what the central bank has just mentioned yesterday, all right? So that was the GDP, okay? Now moving on to inflation. The BOE, okay, actually expects inflation to rise slightly above 4% during Q4 of this year due to energy and goods prices, okay? So recently we have seen an increase in inflation in the UK, right? I think it was 3.2% on year, all right, year on year, which is definitely way higher than the central bank's 2% target. Now, if the central bank were to actually forecast, expect inflation to go above 4, and that's like easily more than 2 times, okay, it's slightly above 4%, right? So it's like more than 2 times of what the central bank will be targeting, right? Will be targeting, okay? Its goal in inflation goal, right? So the question now to ask is, will the central bank be doing anything, okay, with regards to that? I mean, across most of the central banks, okay, the central bankers, they actually mentioned that inflation is transitory due to, temporary rise in oil prices, used vehicles, so on and so forth, blah, blah, blah. Okay, basically, inflation is transitory, right? Not so much for the US, right, I would say, okay? Otherwise, we wouldn't be hearing Jerome Powell, getting more inclined towards a tapering, right, to actually sort of like provide this downward pressure on inflation, okay? So for the Bank of England, it's actually similar, right? Here comes the crescendo. Let me show you the minutes for the 0.65. Now, this is the fun part. All members in this group agreed that any future initial tightening of monetary policy should be implemented by an increase in bank rate, all right? Even if that tightening became appropriate before the end of the existing UK government bond assets purchase program. Look, normally I would tell you guys that, the central bank would actually want to, carry out some form of tapering, before actually considering hiking interest rates, right? That's I would say more like the norm, right? But not for the case, okay, for the Bank of England, okay? Because, probably because the QE structure for Bank of England is different from some of their central banks, right? So like for the Fed, for Bank of Canada, they have been purchasing at a rate. They give you a rate. Say, for example, Bank of Canada is currently purchasing 2 billion Canadian dollars worth of bonds on a weekly basis. On a monthly basis. Okay. So, on a weekly basis. Okay. Weekly basis for Canada. So, they provide this data in terms of a rate, a pace, okay, but not for the Bank of England, because the Bank of England, they give one big figure, right? 895 billion pounds of quantitative easing in total, okay? So they do not provide the rate because, the rate may change from month to month, depending on how the economy were to respond to the QE being injected into the economy, right? So in this case, we can actually be expecting a hike in interest rate, okay, even before the QE program for the Bank of England ends, okay? So why is that the case, all right? Basically, the worry is inflation, all right? If the central bank is actually expecting inflation to rise slightly above 4%, it may actually get out of hand, okay? It may actually get out of hand, right? So let me show you another point. How do I know that, inflation is the main cause? At its previous meeting, the committee had judged that should the economy evolve broadly in line with the central projections in the August monetary policy report, some modest tightening of monetary policy over the forecast period was likely to be necessary to be consistent with meeting the inflation target sustainably in the medium term. Some developments during the intervening period appeared to have strengthened that case, okay? Some developments during the intervening period appeared to have strengthen that case, okay, although considerable uncertainties remain, right, due to COVID. So we can see that, if let's say the current economic status, okay, the current status of the UK economy were to move in line with the central projection, okay, provided during the previous meeting in August, then some form of tightening, okay, maybe increase in interest rates or QE tapering may be necessary. But over here, the BOE actually acknowledged that the developments in the UK economy have strengthened that case. Okay, what this means simply is that we have to look at some form of tightening soon. Okay, otherwise nobody knows what's going to happen. Okay, things may turn bad and things like that, right? So with that, we can actually be expecting, okay, a hike in interest rates. Yes, a hike in interest rates this year, 2021. All right. Look, inflation, the central bank will not want to wait for inflation to hit 4% or slightly above 4%, okay, as projected, before carrying out an interest rate to ease prices. All right, to ease maybe mortgage loans and things like that, right? Oh, sorry, to actually increase the interest rates to actually to actually create some easing in prices. So to wait until the 4% inflation target projection, I would say, is hit, then to carry out this whole interest rate hike to ease off some of the pressures, okay, may be too late. All right, maybe too late. So yeah, the conclusion this time around is that we can actually be expecting an interest rate hike this year. It's very soon. I know it's like, I don't know, 3 months from now. Okay. So
for that increase, for that increase, is that your view or is that a Bank of England statement?
Okay, that is not the Bank of England's view. Okay, so interpreting the statement, the contents that has been released in the monetary statement, that is how I see it. All right. And on top of that, okay, analysts on Wall Street, okay, they are actually expecting earlier, they have actually carried forward an earlier forecast, projection, expectation of a hike in interest rate, the first interest rate hike. Okay. So I think later on I'll be pasting some articles to to show you guys on the news. All right. But yeah, as of right now, personally, I would be expecting an interest rate hike as early as late this year or early next year. Okay, so
there's only another 3 more months to the end of the year, so you're going to be a bit more specific on which month we're looking at.
I give you the month right now, December. All right, why is that the case? Because the next meeting will be in 4th of November. Personally, 4th of November, a hike in 4th of November is, it's not so. They are not as extreme as the RBNZ, okay? They are not as extreme as the RBNZ. And progress in terms of COVID, progress in terms of economic recovery is not as resilient. The economy is not as resilient as the New Zealand economy, so they cannot expect, a hike as soon as November because it's the next meeting, right? So December would be something that I am looking at, okay? Or maybe the next meeting after the December's meeting, probably like January or Feb. Okay, so yeah, like I mentioned, they will be meeting next in November 4th. Okay, and I think Governor Bailey will be speaking. Okay, now that's very important. He will be speaking next Tuesday at a dinner event at 0200 GMT plus 8. Okay, I wonder what he's going to be having for dinner. Okay, given that the UK prices in UK has already risen so high. Okay, and next Wednesday as well, he will be speaking at a ECB forum on central banking at 23:45 GMT plus 8. Now, I would want to pay attention to these two meetings, especially the second one on ECB forum on central banking, okay? Because, to be honest, during the last meeting, okay, when they actually discussed about how the individual committee members felt on, a consideration on interest rate hike, whether the conditions, the criteria has been met for a consideration of interest rate hike, okay? they did not say it in the interest rate statement. They did not mention anything about it in the interest rate statement. Okay, it was during the testimony, the BOE's testimony, that we actually learned that, oh, so there was actually a discussion on that, and half of the members, half of the committee members, 4 out of 8, all right, felt that it's time for us to consider, okay, an interest rate hike. So the next part would be what we have just seen, right? An interest rate hike can actually take place before the QE ends. Okay, so at the moment, I'm actually very hawkish on the British pound. All right, so if you guys are trading, all right, my advice is this: if you want to trade the pound, okay, try to avoid the safe haven currencies. Okay, try to avoid pound yen, pound dollar, and pound francs. All right, I would go for these cross pairs like pound Aussie, pound Kiwi, and things like that, especially pound Aussie. Okay, why is that the case? Because as you guys already know, at the moment the Evergrande saga is ongoing, and as of I think late yesterday or early on today, there was a news saying that they have yet paid the interest to debtors, okay, as of which were actually due yesterday. So it's a bit of a roller coaster ride in terms of the saga and things like that. So when we have like economic uncertainty, political uncertainty around the world, the safe haven currencies, okay, are likely going to move, okay, and we also know that pound is a high risk currency, right? Similar to like Canadian dollar and the other major currencies as well. Okay, so yeah, I'm still going to be looking at a bullish pound. Okay, but yeah, I'm going to pay more attention on the cross pairs, the minor pairs. Okay, not against the safe haven. All right. So with that, yeah, that's all I have to share for the Bank of England. Then with that, I'll hand it back to Scott.
All right, thanks for that, Kim Hong, as well. And also, that was essentially the conclusion as well. Someone did mention about the summary at the end there. So you got the conclusion here first in regards to interest rate rises. So definitely keep monitoring the LCMS Traders Club for updates on anything that we hear in regards to that as well first. So it is Friday, and just before we get into the CAD analysis, I'll just share my thoughts on the US dollar index now. I'll bring the charts up. Thanks to Sam Trade. So we've got the US dollar back down to the very low 93s or so. It did actually breach 93 briefly, 92, 94. And there's an interesting situation playing out. And what I want to share is, so we've got the context here of the US dollar. It has pulled back, even though we did have the FOMC come out and just mention, when tapering was very likely to take place, although there's still a lot of stimulus around in regards to how much money they are actually putting into the economy. What I want to show now is the volatility index for the S&P 500. So there's almost what I would describe as a bit of a dislocation nearly. So we've got, when this is down, typically what we will see is equities will be moving higher or remaining stable. So we're not going to see a lot of selling in equities. So when the volatility index is elevated, such as in February, which we saw it got quite high to 37 or nearly 38. That's when there was a lot of selling, when there was a hint of, oh, there's inflation fears and things of that nature. We've seen it pull back, and I mentioned this at the start of the week, and it's calmer waters. But the situation is we've got the US 10-year Treasury bond yield, and that's slightly elevated now. So this is the 6-month chart here on the Treasury bond yield. And as you can see, it's been maintaining, below 1.3 or so % for a little while, creeping up. And then it did actually get a lift higher. Normally that's an indicator of markets, having a sense that interest rates are coming up, and it's typically indicative of, like when we saw, if we go back to, let's go to the year to date, back in February was a lot higher as it creeped up. So it was more late February into March when we did see the pullback, and then we continue to see that selling, and it got to 1.7. So we are seeing it creep high though, but again, risk on remains in regards to what the equities are doing. So finally, I just want to share this, the news to pay attention to as well, with the economic calendar thanks to Forex Trading Asia. So I'll just bring that up now. So we did see a little bit of news. Still, the manufacturing PMIs are elevated as well. There wasn't really anything that said slow down at all. We did have initial jobless claims. They came in slightly higher than expected, which is worse than expected, given its jobless claims data, but weekly figures, so that's not really that strong of a price mover. Now, later tonight, this is GMT +8 time zone. We've got Fed Chair Jerome Powell speaking. We've got a couple of FOMC members speaking as well. Again, though, we got most of the bang for our buck on that Thursday morning with the economic projections. So we'll just have to wait and see here. I'd like to see how the daily candle closes for the US dollar. But like Kim Hong said, you probably want to venture outside of US dollar pairs, and the pound is actually showing some strength. We saw that as well with the calls made in the Traders Club too. So, you know, if this remains stable, it's just a bit tricky to say, plus the Evergrande situation on the US dollar pairs. I would say just venturing outside of that would be a little bit more appropriate. Again, though, being short-term focused and, you know, definitely managing your risk, because there's a lot of volatility that is around just with the uncertainty that is about in the markets. And we can see that there with the Treasury yield and also with the volatility index. All right, so that's the US index, guys. We do have quite a lot going on with the CAD as well, and we saw that last night. And we've got Jindal Tai here, multi-million-dollar trader with LCMS Traders, just going through how the CAD is looking in regards to any trading possibilities as well. So over to you now, Jin.
All right, thanks for that, Scott. So a lot of information being shared here today. Kim Hong with the details on the Bank of England minutes and statements and decisions with all that. So as we were, or as he's replying to Imran now, just quickly showing you that as well, Imran here. With the minutes, the 7-2 voting numbers here is actually stated at this point. So it's voted by majority of 7-2. So it's not really a dot plot. It's not a kind of chart that's being seen. It's just a number of votes that is being received for a certain decision. So it's being stated here in the summary, monetary policy summary. So with that said, jumping straight into the news that could move the Canadian dollar. Here again, back to Forex Trading Asia, looking at the economic calendar. What you should notice is that we are on Friday and there is no Canadian news at all, right? We just had some Japanese, we've got some European news and pound news to be released, and then the US numbers and some members speaking as well. Following on from that, what you should also pay attention to is that next week, from Monday to Friday, if I just do a quick scroll through, what you should also notice is that you don't see the Canadian flag. There is almost, or there's entirely no Canadian news to be released next week, apart from these, which are not big price movers. This is not big price movers, so I'm happy to ignore that. And then on Thursday, still nothing. All the way to Friday, we've got a lot of news, but nothing for CAD apart from the on Friday next week with GDP month on month. And that one, I can give you the update next Friday when we do the currency call again. So this actually is a good setup. It can be quite a good setup in terms of how to trade the CAD. That means all you have to focus on right now for if you're trading the US CAD is the dollar. It's the strength or the weakness in the dollar. And what we've seen here on the charts for the US CAD for this week is that it's set at this 1.2747 level before finally breaking downwards and testing that 1.2613. So at this point, based on the price action, based on the way it's behaving, I anticipate that we could see that dollar strength come around. We've seen as Scott was sharing with you, a bit of a base, a bit of a support level found on the dollar index. The dollar index here, we've seen it come down to about that point of 92, 93. So we might see a base form there, and then that might actually push the dollar strength back into play. We might see the US CAD bounce back off this 1.2613 support level, same as what it did last week, same as what it did the week before. Quite a strong level 3 weeks ago, and then 4 weeks also at that point. So at this level, I think that we can actually see possible upside to the US CAD. What you're looking for might be a little bit like that. What you're looking for is that buying opportunity above 1.2673, about a 30 pip stop loss for a good 60 pip, 70 pip take profit level. You're still looking at a 1:2 risk reward ratio towards the upside. And that's only the first part of the trade. What you could also be looking for is that potential for it to break through that 1.2747 resistance and hit higher, or to bounce off this point. But I think that we're more likely to see it bounce, break through from that resistance. The first move is towards resistance and then following through from that. I'm going to break away from my usual. We look at the US CAD on H4 time frame, but I was just doing some analysis for a property investor on this for the longer time frame kind of view. If you looked at the US CAD on the daily time frame, what you notice is that 1.2613, if it does bounce off, it's also a relatively good inverted head and shoulder. So it's tested one time, head, and then it's tested again. So if it does bounce off from this point, we could see quite good upside, right? Or if it doesn't bounce off too significantly from here, I anticipate that it could probably come down in the medium term, could come down to that 1.2456 level. So you can see a bit of a shoulder, good head level there, and then the shoulder again. If it does come down and bounce off this point, then we could see that upside. So based on this, I think that even if we do see it go up a little bit, I think the medium to slightly longer term will be for it to come down, test at 1.2456 before possibly bouncing significantly towards the upside. So that's the US CAD on several time frames. We are looking possibly at some volatility to be applied, but in the longer term, I do think that we could see the US CAD move quite significantly higher. With that, I also take the chance to do a bit of a recap of what we've been talking about through the week. The Aussie dollar didn't break, right? We were talking about it. The analysis was if it did break below that 7233 level, we could see it come lower. It has held. That support level has held. Hence, we saw that bounce off. So that's okay. We didn't get into that trade. The Kiwi dollar hasn't broken significantly downwards, testing that 7073 level again. So we're looking to see possibly next week we could see some movements there. Euro dollar hasn't broken lower. We saw that FOMC decision there, statements and decision there, but then we've seen some expected recovery from the Evergrande scenario or crisis or situation. That's why we saw that bounce back up. I think that resistance level is going to be quite crucial. Good thing is that we had a good trade set up on the Euro Pound H4, or saying that we would test, possibly break above that 8590 before reversing all the way back down. It's done exactly that. Broke above 8590, went all the way towards that support level here of 8538. Why this moved is really because of how the pound dollar was moving. We were saying that it was going to come down, test around that 1.3588 level. It's done that exactly before bouncing up, breaking through that resistance and towards the 1.3747 resistance level. So a lot of these trades are driven by news. A lot of these trades are testing a support or a resistance level before bouncing quite significantly and being driven by the news. The US yen, I didn't do the analysis yesterday, but last week we said it was going to come up and test. Did that. I'm super happy with the euro yen where it's tested that 1.128 level and bounced quite significantly upwards. What you should pay attention to is the pound yen. Last week when I spoke about it, I was saying that it would bounce up and test that 151.38 level before tracking down towards 149.39. Did it that exactly. And this is where your support and resistance levels are crucial, because this is where it bounced off back up towards that 151.38 level. At this point, I think that we might see it sit across a bit before possibly tracking back down again. So with all that said, quite a lot of opportunities. You saw the news, the whole list of news that could be released next week as well. So make sure you turn back in, get all the updates, get the analysis with every currency call for next week. With that, I'll pass it back to you, Scott.
Thanks for that, Jen. And guys, remember the YouTube channel does feature the currency call that does get uploaded pretty much straight away. And I'll just share the link now for that. So it has been revamped recently. There's been a lot of effort put into it as well. So I'd strongly recommend making sure you subscribe, hit the notification bell too. We've been growing the subscription base as people are starting to realize that this is a bit of a hidden gem in the YouTube Forex space. So everything's there broken down for you so you can catch the trade ideas. You can also see a replay of when Kim Hong goes into his details in regards to any economic events that are key to the markets. And for now, it is Friday. So for the crypto traders out there, we've got Daniel, one of the senior trading coaches at LCMS, going through Bitcoin and Ethereum. So over to you now, Daniel.
Hey, thanks, Scott. Okay, yes. So what happened in crypto? Let's take a look at the charts right now. So let me quickly give a share here. This is the chart what we are looking at day after day. Wow, last week I was still very bullish, thinking that it is quite good as supported at 45,000 level range at Bitcoin. Seems to be people are buying up and recovering upwards. So I was looking at a possible push up from 45,000 towards the 50,000 level range, waiting for it to break above the 50,000. Let me zoom it in for you. Maybe you can see it better here. Okay, and then you can see it break above the 50,000 level range and moving towards the 58. What a week of change, right now, then it's today, this whole week, it just shifted down towards even, and it seems to be now supported at 41,263, this previous resistance here looking at. So it's right now, for the past few days, this is about 3-4 days ago, this seems to be bottoming up and now some form of recovering, where the crypto investors or the traders seems to be buying on the dip, coming in here at about 41,000 level and some recovering back towards the 45,000 level range. Now, what happened? It's anybody's guess, but it seems to be the timing seems to be going very closely with the Evergrande situation in China, thinking that it hits everywhere. It will hit propagate throughout the whole world economy, and then people are just getting around and want to hold on. Now, we used to be able to hold, because crisis, you hold on to the cryptocurrencies like safe haven currencies, but now it doesn't seem to be. People are just letting it go and holding on to pure hard cash. It seems to be that way, we're looking at it. It's really that's what's happening here. Now, then of course there are a few other minor news happening over the week. Was that last time we really know about China's clampdown that's happening there. Korea, a lot of other countries are really also regulation are actually climbing down, making it trying to control all the the minings and especially the crypto exchange. The crypto exchange. So the latest one was Korea. Korea are clamping down on the cryptocurrency exchange, whether they want to they need to, as following the regulations, have banking supports for these kind of exchange. And so far, only 4 of the major Korean cryptocurrency exchange have done that as well. So a lot of them are a lot of uncertainty there as well. So some of these minor news coming in, but nevertheless, what do we look out for? Why am I looking at is okay. So let me take all these away. I'm right now still going to be a bit bullish, but people are buying the on the dip. However, I would say that we need to wait for this on the daily chart. By the way, I'm going to wait for it. I think it's going to slowly move upwards directions for the coming weeks ahead. Barring any news, I mean, Kim Hong just mentioned about recent news about Avantgarde not paying the interest rates coming in. I think perhaps, it's my personal opinion. I think it's like it's a situation where it's too big to handle, too big to collapse. I think the China government will come in, step in, and make sure that Avantgarde actually pays off the bonds. But I think what's going to happen is they are, I was reading up and we're going to focus. China is really focused on internal coming in and moving to making sure the bonds for the local in China is happening. So I think overall outside of China is going to be a bit skeptical right now, and perhaps maybe some fluctuations going to happen. So right now I'm going to say that wait for it. Okay, wait for it for past 45,000 level range, make it break and close above that. Then before something like this is going to happen, close above here, then perhaps there seems to be some optimism coming in, and we move towards the 50,000 level range coming in. If it does not break and close above that on the daily chart here, I would really suggest to stay out and see what's happening. However, of course, for those who buys, don't trade the crypto but buys on it, I would also suggest, let me zoom it in here, coming in. Maybe around, if it does come big dip around here, this level range here, about between above 41,000 level range to about 42,000, 42 to 43,000 level range, it could be a possible buying opportunity here. And wait for the long-term goals where you push up to back to a 50,000 level range or beyond. Okay, so it's something that to watch out for, and for Bitcoin. Now, Ether, following the big brother Bitcoin, no difference. I was also looking for it's looking very nice support at 3,300 level range and breaking up. It did not even do that. It didn't even go up straight away. A big push collapse back down for probably the same reasons. And of course, Ether has a lot of competitor like Solana and a few at ADA coming with Cardano. But however, all those also plays a dip. So it's not really too much on the NFT, the lack of demand for NFT, nor not the demand the competition from the Ether, so call it Ethereum killer itself. But mostly it's the general overall the cryptocurrency market collapsing there. And it's very, very nice. It actually really supported just above 2,500 level. Okay, so it didn't dip there. It seems to be people are buying on the dip, coming in, pushing up. So again, same thing, as I mentioned previously before. Right now, don't think it's a good time to buy unless it goes down closer to the 2,500 level range, and perhaps that's possibly a buying opportunity there. Else, you got to wait for. I would say, let's say, wait for it to go above the 3,300 level range, and then maybe try to hold it to about 4,000 level range there. Now, why am I so optimistic? Because right now isn't the dire straits so badly. The long-term trend is still pushing up. Yes, there is a peak level at 4,000 level range, but the applications, there are a lot of applications still coming in. For Ether coming in, NFT seems to be still getting popular. The application, so I think the demand will still be there moving forward. So I'm not, as you can see, I'm not saying that you may push higher, but I'm looking at it for right now, opportunity to push up all the way to 4,000 level range in the long term or medium term could be a possibility. So watch out for it. So summary of it is watch out for it. Stay out of the market unless it goes further down for Bitcoin. If it goes below, go around about 4,100 to 4,200 level range could be a buying opportunity where you can buy the dip, and the Ether as well. If it goes down to quite close to 2,600 level, 2,600 level, 2,700 level, it could be another opportunity for you to buy on the dip. Else, for those traders there, I would suggest to break above the resistance and to confirm the recovery of the crypto market before you even do any trading at all. Else, stay it out. Okay, but bear in mind, this is my personal opinion here. So just go on. Okay, Scott, back to you.
All right, thanks for that, Daniel. And guys, just before we just do a brief recap of how the LCMS Traders Club went for this week, I just want to reiterate that the Trade Ideas playlist is in the chat now in regard to the Zoom live chat, that is. For any trade ideas that are mentioned in the call, they are actually posted on the YouTube channel. And I also do a summary write-up of the currency call as well. But the gold standard is, frankly, I rewatch the currency call as well and make sure that I understand things. So that is, a little bit of effort and work. But if anyone's, thinking about, oh, is the Traders Club worth it or not? I mean, you can watch hundreds of videos on the YouTube channel and get an appreciation in the fact that we are definitely the real deal. There is obviously a lot of, individuals out there in the Forex trading ecosystem. And I would strongly recommend that I think, you can definitely try before you buy in regards to the Traders Club, because the YouTube channel has everything there and you quickly appreciate the quality that's present too. But just to finish up, guys, I know we're a bit over time, but Daniel's just going to do a quick recap into how the LCMS Traders Club went for the week and just a little bit more information about the club as well, just to finish up. So over to you now, Daniel.
Okay, thanks a lot, Scott. Again, okay, I'll be quick. Anyway, today I just want to focus on the signals in the LCMS. One of the features there is the LCMS Traders Club, and that is the signals. Now, a lot of you as I've been asking, and those who have come in from the Telegram channel came in, and you'll be wondering, you have been on the Telegram channel, you receive a lot of trade signals, but seems to be late. Yes. Here in the platform here, the signals where we do here, it actually, we send out 5 minutes earlier than the Telegram channel, which is a free channel. For those who are club members here, they get it early and on time, right? So we get the signals come in here where we tell you where to buy, what's the currency pairs, what's the signal, what's the entry price, possible stop loss, and the 3 possible take profits to profits level. Okay, so really, not only that, you could see here, let me maximize here, you could look at it and you can see that we not only give you the signals, we also give you the strategy and the reason behind every signals and take profit level. So you can see here, stop loss, we hit the stop loss. If it's like, for example, USJ, TP2, probably TP1 will tell you to continue possible the whole. TP2 tell you to at 40 pips, telling you possible secure profits. And the reason is because, most likely we help you look at the market at that point of time, and doesn't tell us if you continue to go on, we'll probably say, hey, exit out and secure your profits. And this is how, you could not only learn to trade better with all the analysis of why we take the trade for example, US yen buy trade, we also learn how to trade better, and following the signals, we also guide you through the signals. Now, you must thinking, hey, then was there can I get a notification? Yes, because this platform in the LCMS Traders Club is available on the web, desktop, and even the mobile application, which means you can access all the contents anywhere, anytime, and receive mobile notifications for our signals here. Now, how do you get the signals here? It's really very simple. All you need to do is just go to tradersclub.lcms.sg. Join us there. There's not only the signals here, we have the market analysis coming in, for any trade ideas that we have, we place it in there as well. We have our the Forex analysis for the long-term and medium-term trades idea as well. Anything happening in the market, we'll put it in this group as well, where we host a committee of Forex committee traders here, guiding and supporting each other. Okay, so really, just scroll it down here, click on this, or the $49 a month. Now, this is worth thousands, it's so much beneficial, but this is without a doubt, the least you have to do, if you want to perform your best in your trading here. So click on the button, $49, only $49 a month, and you can just get on board right now. And see you in there. Scott.
All right. Thanks very much for that, Daniel. And thanks everyone for joining us this week too. I hope everyone has a great weekend. Please remember to click the link, get subscribed, and enjoy the weekend, and hope to see everyone next week for the Aussie and Kiwi to start the week on Monday. Bye, everyone.